Welcome to the other post-employment benefits trust fund meeting this morning. I'm Heather Clayball, the Associate Superintendent of Fiscal Services, and I act as the trustee for the fund. To start off, I would just like to Sharon Eberg, who was our FACE president. She has completed her term, and so she is no longer the FACE president. So she will be leaving the committee. She was unable to be here today for us to officially thank her. And Karen's, I'm going to pronounce her last name incorrectly, Sewell. There's Dean. Is the new FACE president. She was unable to come today, but she will be joining us for future meetings. So we did have that one turnover. And then also our new public member, Stephen Austin, who is here via phone. So we don't get to see his face today, but welcome to the committee, and we appreciate you and your time volunteering to serve on the committee.
Thank you. Glad to help out.
Excellent. So I do have, before we get started with the minutes, I just wanted to let you know that we are in the process of completing our audit, our fiscal year 24 audit. And as part of that audit, we received from from Bolton, which is one of our advisors that does the review for our statements, to help us prepare our statements in regards to the requirements as in for the OPEB trust, and affirming what the net position and what our funded status is. So we received this report very late last week, and I just want to let you know that we are now officially 28.88% funded of the OPEB. So that has gone up, basically due to, fortunately, good investment strategies and a market that has been favorable for us. But one of the things that they did caution about is that as they do the review and create the discount rates and do the actuarial review, one of the things they take into consideration is our annual contribution that the board makes. And because we've missed it for 2 years, it is something that when they do the actuarial review next year, they will, it could affect how that 30-year look is. So it's just something, as we move through the budget process, as we move through reviewing the fund, that we're going to need to keep in mind, so that hopefully, depending upon how the budget process for fiscal year 26 goes, we'll have the opportunity to be able to make a contribution and get back to the place where we're increasing our contribution to meet what the board had signed a few years ago. So that's all. I just wanted to bring that to your attention. Once the annual comprehensive financial report is due to be published at the end of September, we're just beginning the audit. Well, the auditors will be here, I believe, next week. And so we're just closing out the fiscal year. But I just wanted to give you that information because I thought it's a good piece of information. It's a positive piece of information in regards to us moving closer to our goal to be 50% funded. But it just, I think it's good to have, as we move forward, an idea of what future outcomes could be in regards to that. So that is the last announcement and introduction I have. So we'll go on to the approval of the May 24th meeting minutes.
I motion to approve the Friday, May 24th, 2024 OPEB minutes as written.
Do we have a second?
I'll second.
Okay, Renee. Lynn, did you get that? Derek and Renee was the second?
Yes.
All those in favor?
Aye.
Aye.
Excellent. All righty. Let's move on to Tanya and Christian for the analysis of the investment performance.
Morning, everybody. Lynn, do you prefer I share the materials or?
Yes, please.
Okay. No problem. Give me one moment. Okay. Can everybody see that now?
Yes, we can see it.
Thanks, Heather. Okay. So our first item is the performance review through June 30th. And as Heather mentioned, and as you know, this is our fiscal year. So spoiler alert, happy to announce that you had a very strong fiscal year, up 15%. We will look at the results as we go through the report. So let me first start with a financial market overview. Overall for equities, it was another strong quarter. US equities up about 4.25%. Emerging markets also had a strong quarter, actually up 5%. And international developed was slightly negative. So overall, I would say, generally in the markets, very, very favorable performance continued. US equities, you can see kind of the split between growth and value. Growth stocks continue to outperform value, and generally large cap which is the Russell 1000, has continued to outperform smaller cap names, which is the Russell 2000. We have exposure to all areas of the US investable market through our index fund. So despite the fact that growth is kind of leading the way, we don't have any biases towards growth or value. And we're capturing the full benefit of the US market, which on a one-year basis, the S&P 500 was up 25%. So continued strong earnings, continued kind of rally, particularly led by large cap and information technology stocks. You can see really driving performance, as well as communications, both of those on the one-year basis up over 40%. So those kind of handful of stocks at the top of the market continuing to drive most of the market performance. Skip ahead a couple of pages to fixed income. And of course, we've talked about interest rates, the Fed's policy, and the expectation for when rate cuts might actually start to happen. We'll see what Chairman Powell says in about an hour or so when he speaks. But we do expect to see at least one or potentially two rate cuts throughout the rest of 24. During the quarter, interest rates as a whole did rise, and so we did see slight negative performance in the fixed income market over on the investment grade side. But generally the aggregate as a whole just slightly positive. So on the 6-month basis, actually in negative territory, and then the 1-year basis up about 2.5%. So fixed income returns have been a bit more muted, but kind of moving in the direction we would expect. International fixed income was negative for the quarter, and we do have exposure to that through one of our managers who Western Assets. So we'll talk about that when we look at their performance. There's been a lot of movement in the markets since then. Of course, a lot of volatility, I would say, over the last couple of weeks, but performance, I can show you this chart that I ran yesterday through earlier this week. Really all asset classes, with the exception of international stocks and commodities, on a calendar year-to-date basis, are in positive territory. So let me go back to our report, but pause first and ask if there's questions on the markets. Okay, I don't see or hear any, so I'll continue on. This is our executive summary, which really kind of spells out everything that is in our report. So assets as of the end of the fiscal year at just under $192 million. That was an increase of about $25 million. And since we did not have any contributions, all of that came from the investment earnings and income in the fund. So as I said, fiscal year return up 15.2, slightly ahead of the policy benchmark, which was up 15.1%. For the trustees who've been here, you'll recall when we met last quarter that we approved of rebalancing from equity to fixed income. And so the first phase of that did take place in June. We moved $10 million from equity to a new fixed income fund with the Fidelity US Bond Index Fund. And we will complete the second phase of that next month. in September. And I did run the current allocation just to make sure that no tweaks were needed to that. And based on current assets, still recommend moving that second $10 million next month. We've also talked about the watch list, and we've had Western Asset on there for a couple of years now due to performance reasons. We actually have an update on them kind of as a firm, which Christian will talk to in a little while. And so we do recommend continuing to keep Western Asset on the watch list. So moving on to asset allocation, this is the policy that we've had in place. We are moving away from this policy. So when you see our report next quarter, these targets will be updated. So US equity is moving towards a new target of 47%, international equity moving towards 13%, and fixed income will be at 40%. So we're moving a total of 10% overall from equity into fixed income. So we did kind of the first half of that this quarter, as I said, and we'll do the second half in the third quarter. So technically still within all our allowable policy ranges as of the end of June 30th. Asset growth I already kind of touched on, but you can see it here. Just the numbers for the fiscal year, 25 million in growth, up 15.2%. The 3-year growth is really strong, also up about 20 plus $20 million. 3 million in contributions during that time period, and about 21 million in investment earnings over the 3-year period through June 30th. So performance for the quarter, total fund up 1.8%, just behind the policy benchmark of 2%. Calendar year to date, strong numbers, and then the fiscal year, 15.2. Longer term, generally outperforming the policy benchmark, and that's just a blend, a weighted average blend of the benchmarks that we use for domestic equity, international equity, and fixed income. So as I said, our domestic equity exposure in a market index fund, so large cap, small cap, mid cap, growth value, it's kind of all encompassed in one index fund for a very low cost, 1-year number up 23.2%. On the international equity side, we have one active manager there with American funds. They're up 10.8% for the 1 year versus the benchmark 11.6. The 6-month period through June 30th, really strong, up 7.2 versus 5.7. Longer term, we've had them a little over 2 years. They're just behind their benchmark. So with a little bit of a growth bias, some of their names have hurt them, but overall, very strong absolute performance and a manager that we continue to like. And then on the fixed income side, predominantly with Dodge & Cox, which is our core aggregate manager, they've added favorable performance versus the benchmark over time. Western Asset is kind of that core plus exposure. So some of the areas, particularly international and emerging market debt, have hurt them a bit this last quarter and the last few months. So that's a smaller exposure given the riskier nature of that portfolio. So that's about 6% of assets. And then we just added in June the bond index fund. So that's our newest manager there, 5% of assets. That is going to go up to about 10% of assets. And we do not have any returns at this point. Since we just funded them in June, we'll start to show performance for them effective July 1st. And then just a very small position in a money market fund at the bank. So overall calendar years, actually I'll jump ahead a couple of pages to you can see the trailing fiscal years, 2 double-digit fiscal year returns in a row, 24 and 23. Of course, fiscal 2022, had some of that calendar year 22 experience in there, which was not favorable, but longer term, other than that 1 year, generally all favorable performance in positive territory on your fiscal year basis. Let me pause there and ask if there's questions. I can show you the fee page. Overall fees are pretty reasonable, very reasonable in this fund. I would say at 20 basis points overall. And we do have significant exposure to the index funds, which keep the overall costs down. So let me pause there and ask if any of the trustees or anyone have questions. Committee members, excuse me. Okay, I don't see any. I'm not sure if you need a motion to approve our report or if we just move to the next agenda item.
Tanya, do you want, maybe we should just spend a minute on Western.
Sure, that would be great. Thanks, Kirsten.
So if we go back to page 16, and just as a bit of background here, if you look in the fixed income portion of the portfolio, I think the first comment to make is Tanya showed you a more recent index snapshot through August, and important to note that the bond market is about 4.5%, 4 to 4.5% higher than what you see here. So that's just to say the timing for funding that U.S. bond index, which was meant to be complementary to the other two pieces here, so far has been very good. So that's been a positive turnaround. In addition to that, if you look at Western, they've been sort of on the wrong side of this inflation call for a while now. As you know, they've been on the watch list, and that's been largely driven by performance. I will note that the next time you see performance, if current trends hold, just given how they've been positioned, you're going to see a pretty big turnaround in performance. So that's positive. But what's happened more recently is really has less to do with performance and more to do with an update at the firm. This is still very much in sort of we're finding out what's going on phase, as opposed to having a lot of detail for you, but it is hitting the financial press, so we wanted to just mention it. The co-chief investment officer, who's been there for a very long time, his name is Ken Leach. He received a Wells notice from the SEC. This was released earlier this week. And essentially, from what we know now, they're looking into how a very large volume of trades were allocated in various Western accounts from 2021 to 2023, essentially whether there was cherry picking going on and more favorable treatment of some Western accounts versus others. The Wells notice implies that the agency may recommend enforcement action, but it's not a given yet that he'll be charged. Importantly, he has subsequently stepped away from the firm. There was basically a plan for his retirement, a succession plan that was put in place last year. And another gentleman at the firm named Mike Buchanan was elevated to co-chief investment officer. He has now been elevated again to sole chief investment officer, with Ken Leach stepping away. So the good news there is just Western's approach overall is very team oriented. And obviously they had taken steps well in advance of this to move beyond Ken Leach. But again, we don't have all the details yet. We've had numerous calls with Western this week. We expect to have a memo, hopefully revealing a bit more either by the end of today or maybe by Monday. So we'll certainly share that with the committee when we get it. We don't know whether this specific fund, which is really their flagship fund, the Core Plus fund, is directly impacted. But obviously there could be a lot more to reveal here. So just wanted to give you that update that we have so far, again, given that it's been in the headlines and there's likely going to be more developments on this front to come. So let me pause there and just see if there are any questions about any of that on Western.
Christian or Tanya, like if they were to, I'm kind of looking forward in the crystal ball, but if they were to determine that there was improper behavior by Ken, like how would that affect your guys' view on the firm from a governance standpoint? And would you still recommend keeping on the watch list, or is that kind of the crossing the Rubicon?
Yeah, at this stage, we just don't know. I think the one thing you can say about Western that, in many ways, if you think about Western and who they are, being on the West Coast, very large bond manager, they were kind of always viewed as the anti-PIMCO, in the sense that as opposed to having a star model driven by one portfolio manager, they sort of went about their business much quieter, less in the headlines. And I think a lot of people like that about them. Now, they've made a few ill-timed calls, I'd say, in terms of the bond market, 2009 being the first example, being on the wrong side of this inflation sort of situation more recently, as I described. So there's obviously performance has been the primary concern up to now. There really haven't been these big organizational concerns. Even if you look at the Core Plus fund, there's 5 named portfolio managers, and there has been a bit of turnover there even before this event in the past. But overall, we've as a firm felt pretty confident in the group that's been steering this portfolio. So We don't know if this really extends beyond Ken Leach. We don't know the intent that he had. We really don't have the details at this point. But Brian, I think it's conceivable that, you know, given the fact that he's received a Wells notice, this is probably not a nothing event. We don't know if there have been specific impacts in terms of these allotments of trades that would have had a negative impact on this fund, but that would be something to take into account. So with all the question marks, hard to say, but you know, we're going to take a hard look at it, and it's not inconceivable that we would have a change in recommendation based on the outcome.
Appreciate it. Thank you.
Yep.
Just as a point of understanding, a Wells notice is,
It's a notice from the SEC, basically indicating that they've researched a particular aspect of the operation here, and that an enforcement action is possible. So again, we don't know that he'll be charged. I think it's also worth mentioning that the government separately under the Department of Justice, the DOJ, is looking into this as well.
Hi, Stephen Austin here. And I know I'm sort of new to this, so I'm not sure if I'll say some things that are within the discussion scope, but I have a fair amount of experience. My sector focus is financials, which includes asset managers, and you know, having worked in the asset management industry for 20 years in both the hedge fund and long only space, I would be very, very leery of keeping anything at that fund. You know, I'm reading articles about outflows because of this Wells notice, and I even worked at a firm where something somewhat similar happened and outflows began. And I know this is a much bigger firm than the one I was at, but the problem is once the outflows start and the fee generation capability starts to decline, the ability for these companies sometimes to adjust their expense base in relation to the outflow volume is problematic.
Yeah, that's a fair point.
So I'm just saying it might get a lot more complicated, but I'm not sure how quickly you can adjust your exposure to this firm as well.
Yeah, the good news here is that it's quite liquid, both by vehicle type, given that it's an institutional mutual fund, a 40 Act fund, but also, you know, the majority of the underlying portfolio is also quite liquid. You know, I think the specific types of instruments in question here are U.S. Treasury futures, which that market, you know, is widely known to be quite liquid. Now, that said, just given the unknowns about the impact, I think we're going to be pretty proactive here. I mean, my hope is that we have more information today, and then just given that the spotlight is on this, you know, we'll be in a position to move pretty quickly once we know a bit more.
Okay.
Christian.
And if anyone wants to follow up with me, I will put a little extra effort on monitoring this situation. You know, I get a lot of research on the asset management space, so it's just not something that I paid attention to because I'm not personally involved in Franklin Templeton.
Hey, Christian, I would just add, as soon as you have more information, if you could share it with the group fairly broadly, because you have public servants who potentially have, you know, some reputational risk with the fund owning something that could be in the headlines. So,
absolutely. And I'll just note, you know, this is definitely a surprise. I'd say a very large surprise, just given the reputation of Ken Leach generally, the fact that he's well known in the industry and well respected, and Western as a firm. So we don't want to be too quick to rush to judgment, but we understand your concerns, and obviously we're concerned as well.
Brian, thank you for putting that link in the chat in regards to the Wells notice. I appreciate it.
Any other questions on the Western situation or fixed income more generally before we move on? Okay, Tanya, I'll turn it back to you.
Okay, thanks, Christian. So we just wanted, since we came on board in 23, we've been on this fund for just over a year. We've gone through kind of a lot of different action items, and there's some new committee members, and so we thought it would be helpful to just kind of walk through everything in terms of where we've been, what we've done, and potential future action items as well. So this is just meant as kind of a point in time look at what we've done so far as a group together and some of the changes that we made. So I mentioned when we were looking at the report, the asset allocation. That's the second item here, that we did look at the overall asset allocation and made some decisions to bring down the equity exposure just from a risk perspective, thinking that it makes more sense to move some equity money off the table. So that was completed in May of 23. At that same time, we consolidated your U.S. equity exposure into one U.S. all-cap mandate, and that's the index fund, the all-cap index fund. In concert with the updated asset allocation, we implemented a new investment policy statement and approved that, or submitted that to the Board of Education for approval, and that was approved at their October 2023 meeting. Part of the asset allocation was an exposure to what we call multi-asset class, or MAX. We reviewed that asset class in February, kind of gave an educational background on the asset class, and did have some charts looking at potential candidates in that space. But the group agreed that at this point, given the interest rate environment, we thought there was a better opportunity going directly into fixed income rather than the multi-asset class portfolio. And so that's sort of put a pin on that. We're not saying we'll never revisit it in the future, but that item is sort of completed for now. And then similarly, or not similarly, but on the private credit side, we had kind of a series of meetings or series of sessions where we talked about private credit. In August of last year, we first had an introductory educational session with our colleague Joey Mallon, who kind of introduced the asset class as a whole. In November of 23, we had Hamilton Lane come in to present, and they actually presented their Strategic Opportunities Fund 8. So that's this is a slight typo. The decision that was made in February of 2024 was to actually approve the commitment to Fund 9. So that allocation of $8.5 million was approved. We received the documents from them earlier this year, and that is in the review and final approval process. And then on the fixed income side, as we talked about last quarter, we approved a new 10% allocation to the index fund with Fidelity, and that's a $20 million total investment. We implemented phase 1 in the second quarter, and phase 2 will take place this quarter. And then one other item that we had on our kind of original roadmap was to look at the international equity portfolio, consider possibly adding a complementary manager to American funds there. That's kind of an open item that we may want to discuss at our next meeting. And we also talked early on about potentially looking at real estate again in the future. There's no allocation to real estate in our policy right now, but we may want to do kind of introductory education, what an investment in that asset class might look like. So that could be a 2025 item. That's really it. I think we put this presentation together prior to the information on Western Asset. So in the event that is a more pressing item and kind of not resolved by the November meeting, that may take precedence over the international equity review.
Hey, Tanya, just real quickly, if in a very short period of time we were to get more information to lead to a decision to exit West WAMCO, would you need another meeting? Would you need approval to exit that, or?
We would, and I'm not sure, Brian, the committee kind of process, if that could be done through an email vote or, kind of a quick interim meeting call. But I would say if our decision is to exit quickly, I think we're already in a good position, having opened the index fund last quarter. That would probably be our recommendation, would be to move the money there, at least on an interim basis, and then we can revisit again a potential future active manager.
Got it. Thank you.
So it's not really spelled out in our guidance, but we certainly could. I think we could, if we get to the point where there's information shared, it might be easier to do perhaps an email vote where we could contact everyone, or if everybody's available, hop on the line quickly and have a 15-minute conversation or whatever amount it takes. I think we need to get the additional information, which sounds like it's going to happen maybe today or early next week, that we'll have information. So I think if we just acknowledge that we may have a conversation that we need to have rather quickly, and I guess how quickly, from your perspective, do these type of things resolve or get to a point where you need to make a decision? Or is that kind of a difficult question to answer because it could be many variables?
Yeah, in situations like this, it's hard. I mean, typically our research group likes to take the proper time to sort of gather all the information before we just say, let's sell immediately. That's not that's more typical of our process, I would say, to get as much information as we can. But that said, this is obviously a very quickly developing situation. So if the conversations that our researchers are having and the information they're getting are indicative that it's something we should move out of immediately, then we can do that.
So on the calendar, one thing I'd like to, I know in the past, prior to my tenure, there was some fiduciary training, I think, that you all
Yes.
did. And I know we have a couple new members with the turnover as the FACE president, that the last time you did that, was that a separate meeting, or did you do
Yes.
it? Okay.
Thank you for mentioning that, Heather. I made a note on my paper here and I forgot to mention it, so I'm very glad you did. Yes, we did, I think, 2 different trainings. One was just kind of a basic investment training, what's a stock, what's a bond. And the other was more of a fiduciary education, kind of what's your role on this committee. So we did those last fall, I think, and we'd be happy to do those again. I think they could probably be done in one session, and it would be kind of open for all committee members, of course.
I think that would be an excellent idea. I want to reach out. Lynn and I will reach out to our new FACE president, because I'm not sure. I think she works in our transportation department. So I want to try to pick a time that might be better suited.
Sure.
Because this time of day, for our friends getting on the buses,
Sure.
so we might have to find a window in the middle of the day that might work best for her. And then also any other members, but we might need to think about that and just keeping in mind the work that some of our team members do. The timing is, finding the correct time is not always the best, but I think if we combine those, I think that would be great. Missy, did you have a question or a comment?
I was just going to confirm that Karen is a route specialist in transportation and also often subs driving. So this is, you're right, probably the worst time of day except dismissal for her. So
right. So hopefully things will be a little calmer in a month or two. But let's we'll reach out and we'll get some times of day that might work best, or see if there's a day when we don't have students that might be might be better.
Sure.
That way, any of our staff members who work for FCPS who have student responsibilities, it might provide a little flexibility for them.
Sounds great.
Are there any questions regarding the items that we're going to be looking at in the future? Okay. Do we have anything else for Christian and Tanya? Do we have any other items?
That's all from us.
So that concludes our items on our agenda. As a reminder, our next meeting in November is in person here at the central office in the boardroom. where we'll get to use our new recording devices. Lynn and I are getting prepared. So we'll have those capabilities. And if there's nothing else,
Heather,
oh, yes, sir.
can you remind me the exact date in November?
Yes, it's Friday, November the 15th. Sorry about that.
That's okay. Thank you.
Hey,
The
Heather.
other meetings are at the bottom of, when you get home, you have an opportunity, all 3 meetings for the remainder of this fiscal year are listed at the bottom of the agenda. But our November meeting will be in person.
Hey, Heather.
Yes.
Could I ask you a question about something you said at the beginning of the meeting? You were talking about, I think it was the actuarial impact of not making contributions.
Mm-hmm.
Is that information going to be shared with the board through Dean for the full board to kind of understand the impact or potential impact that the budgeting decisions have on the OPEC trust?
Yes. So that as we're finishing up, we have the actuarial report that we'll be able to share as we're finishing up the audit process. And we absolutely can have the conversation with the board. And typically in December, there is an update on OPEB that's typically done. I think it's November or December that I go before the board with an update. So that would be something that we would discuss then.
Got it. Thank you.
And that's part of it's usually an afternoon work session item that we handle. And I think the timing this year will be in December. So it'll be after we welcome our new board members. So it'll be kind of as we start the budget process. We've already started the 26 budget process, but as we really get started in December and January with the release of the superintendent's recommended, but that will kind of be there in December.
Heather, you hold your excitement back really well about the budget process.
You know what? I do love the work that I do. I don't know if I'm a glutton for punishment, but they're my numbers and I love them. Even on the worst days, it's still the work that I really enjoy. I don't know what that says about me. But, all of the people around here who deal with the numbers, we all have the same type of attitude. At least they're numbers. They are what they are, and we'll hopefully give you the right ones, the best ones, and be able to move forward and make good decisions.
And if I can chime in on that, I'll I guess reassure everyone that the board members that will be staying on have a full understanding of how important these investments are. We just ran into a really difficult budget cycle, but I think beginning in December, when Heather kind of gives important information to our new board members that'll be coming on, there'll be a full-fledged commitment of the understanding of how important it is that we fund our OPEB. And having taken 2 years off, I think it's more important than ever that we get back on track. I think one of the things we've talked about is our success, and thank you everybody for what great investment success we've had, but that points to we missed out of investing in periods of great success. So I think everybody's going to understand how important it is in the coming fiscal year that we're going to have to commit to making sure we're on track to that 50% commitment. So thanks for bringing that up, Brian. I appreciate it.
Okay, well, if there is nothing else, thank you all so much for your time today, and we will see you in person on November the 15th. Yes, Ms. O'Neill? We generally don't take public comment at committee meetings. So
I just wanted to thank the members today, and I wanted to let you all know that the remote virtual program appreciates the funding that has been provided by the OPEB, and we look forward to working with you in the future.
thank you very much. Everyone have a great day.